Welcome back to WOW, the Wealth Optimization Workshops here with Scott Culler. Excited to have you back. Going to cover some very important planning. We've dealt with some health statistics, the overwhelming risks, 1 in 3 odds that you're going to have a disability during your working years that keep you off work for a period of time. Far too much risk. Income replacement protection. Ultimately, that's what disability insurance is. It is to help replace your income. Typically, on most plans, 2/3 of your income would be replaced on a tax-free basis. Now, keep in mind, we talked about the 1090 rule before, setting 10% of your income aside. People say, well, I can't afford 10%. That's fine. Rome isn't built in a day. Start with 2%, 5%, whatever you can handle. But then, in the same meeting, people will say, hey, if I lost 1/3 of my income, I'd be okay. How are you going to financially get through that time? Especially if you're self-employed, in a profession, in a trade, right? We talk about group versus personal coverage. Lots of workplaces provide group benefits. However, there's definitely certain enhancements on personally owned plans rather than group coverage. All right, so just be aware of that. But for a lot of people, especially when they're self-employed, or in a profession, in a trade, they don't even have any coverage through their group. So even more important that they have a personally owned plan. Some key points, these plans can be very complex. Definitely recommend talking with a professional. I'm happy to answer questions if you have questions on specifics and whether or not it's relevant or suitable for you. But a couple of key points: own occupation versus any occupation. Particularly when it comes to disability income protection, the definitions, the legal definitions of how those plans are structured are very important. What do we mean by own occupation? If you can't do your specific occupation, you're a dentist, you're a plumber, whatever the case might be, if you can't do that occupation, you're going to get paid the 2/3 of your income tax-free. Great. Any occupation definition, basically, are you totally disabled where you can't do any occupation? That is a far different setup. On most group plans, they cover you for 2 years in your own occupation, and then to age 65 if you're totally disabled where you can't do any occupation. So if you're something, we mentioned dentist as an example, but lots of different professions. If you can't do your specific career that you were trained for, do you want to be forced to go back and do some career where you don't have the same income potential or the same satisfaction in the job? So definitions and how you structure that is important. Do you have partial coverage? At work, often you do not. So if you can go back to work on a part-time basis, you're back to work on a full-time basis. Do you have partial coverage that would allow you to maybe come back 10 hours a week, 20 hours a week, and gradually work your way back into full-time work? Do you have cost of living factored in there so that over time your disability income replacement is going to get adjusted with inflation? Because today's money or the plan that you take out initially isn't going to be the same value of plans 10 years, 20 years into the future when you're now on claim. How about overhead protection? Do you have a business that has some significant overhead expenses? So beyond replacing your personal income for your family to sustain your standard of living, should you have overhead protection that covers some of the costs of your business so that your business can stay afloat to give you 15 months or 24 months, let's say, to make a decision to say, yes, I'm better and I have a viable business that I can now come back to, or no, I'm not going to get better, but now I can sell my business for fair market value rather than 10 cents on the dollar at fire sale prices. Does that make sense to you? We have a good analogy: the goose that laid the golden egg. Right? When we ask people, what's your most valuable asset? They say, it's my house, it's this, it's that asset, or this asset. And they think of physical assets. Your most valuable asset is your ability to work. Your ability to earn an income. That is worth potentially millions of dollars to you over the course of your career. What if you can't work? If you had a goose that laid golden eggs, would you insure the goose or the eggs? every time I ask people, they always get the right answer. They go, I'd insure the goose. Absolutely. Why? Because they're the ones that lay the golden eggs. Makes sense? So why, when we look at the typical Canadian, do they have incredibly well-insured eggs? Not just car insurance, house insurance in case their house has a flood or a fire. But if their golf clubs get stolen out of the garage, they go buy their kid a new iPad or a new PS4 system and they take out the extended warranty on a video game system or their iPhone. Really important stuff. But then we talk about the breadwinner, about their protection around themselves, around their health, around their ability to earn an income, and they're going to go with nothing. They're going to just risk it, when the risks are far greater and the consequences of who's going to pay for those golden eggs if something happens to you. So while we work at helping you to build wealth, let's make sure we protect your ability to earn an income during a disability or health crisis. Hope that makes sense. Look forward to sharing more ideas with you as we go along. Take care.